Something extraordinary is unfolding in the silver market right now, and this is not the kind of move we see every year or even every decade. This is the sort of moment that quietly reshapes entire markets while most people are still not paying attention. What we're witnessing today in precious metals, especially silver, is the kind of price action that comes once in a generation. And if you look away now, you could miss what may turn into one of the largest wealth transfer opportunities of this decade. In this video, I'm going to explain exactly what's happening in silver, why the markets are reacting so aggressively, and what this could mean for anyone who already holds precious metals or is thinking about stepping in. Let's get into it. At this very moment, silver is trading at $79.11 per ounce. But the real story isn't just the price level, it's the speed and intensity of the move. Silver is up $4.40 in a single day, a massive 5.89% jump in just 24 hours. In all the years I've closely followed the silver market, this is the largest one-day move I've personally seen. To put that into perspective, a near 6% move in a major asset within one day is extremely rare. Yes, silver is known to be more volatile than gold, but even by silver's own standards, this kind of explosive movement is highly unusual. When prices move this fast and this aggressively, it often signals that something deep and structural is changing beneath the surface. What makes this moment even more important is that silver isn't moving in isolation. Gold is also rising today, gaining 51.3 for dollars, which comes out to roughly a 1.15% increase. On the surface, that may seem small compared to silver's surge, but this is where the bigger picture becomes clear. Gold has just pushed into a brand new all-time high at $4,532.18 per ounce. That is a major signal. When gold enters uncharted territory, it confirms that the broader precious metals bull market is not speculation, it's reality. Gold is traditionally viewed as the more stable and conservative metal, so when it breaks records, it tells us that large institutions and serious long-term investors are positioning themselves with conviction. The most powerful takeaway here is that both metals are moving higher together, with silver dramatically outperforming gold on a percentage basis. This combination is exactly what you expect to see in a strong and healthy precious metals bull market. Gold leads by establishing confidence and stability, while silver follows with explosive momentum. This is classic bull market behavior, and history shows that when patterns like this appear, they tend to mark the early stages of something much bigger than most people initially expect. Now let me share something that may catch many people completely off guard. Platinum has also just moved into record territory. The previous all-time high for platinum was set back in 2008 at around $2,270 per ounce. Today, platinum is trading near to $157.70 per ounce, marking a powerful move of $246.60 higher in a very short time. That's a gain of nearly 10.91%. This is important because platinum rarely gets the attention it deserves. Most discussions around precious metals revolve only around gold and silver, while platinum quietly stays in the background. But when platinum starts breaking out alongside gold and silver, it sends a very clear message. Demand isn't isolated. It's spreading across the entire precious metals space. This kind of move isn't driven by hype or short-term speculation. It reflects real, underlying buying pressure building throughout the market. When you see gold, silver, and platinum all pushing higher together, it confirms that something much larger is unfolding. This is the type of coordinated strength that typically appears when long-term capital begins positioning itself aggressively. And if you find insights like this useful and want to stay ahead of what's happening in the precious metals markets, staying connected becomes critical. Markets move fast, and missing key moments often means missing opportunity altogether. Now let me explain something that is completely reshaping the way I personally think about investing in precious metals. The gold-silver ratio has now dropped below 60, and that's a level that deserves serious attention. The gold-silver ratio simply tells us how many ounces of silver it takes to buy 1 ounce of gold. When the ratio is high, such as 80 or 90, silver is considered cheap relative to gold. When the ratio falls to lower levels like 40 or 50, silver becomes relatively expensive compared to gold. Over long periods of history, this ratio has tended to hover around the 60 to 70 range. To understand why this matters so much, think back to March 2020, when global markets were in panic. At that time, the gold-silver ratio exploded above 120, an extreme and rare event that signaled extraordinary value in silver. That was a moment when silver was deeply undervalued relative to gold. Now, with the ratio slipping below 60, the situation has changed dramatically, and it's forcing a shift in strategy. Earlier in this cycle, my focus was almost entirely on accumulating silver because the ratio clearly favored it. As conditions evolved, I moved toward a more balanced approach, allocating into both gold and silver. But at these levels, I'm now seriously considering prioritizing gold over silver. That might sound surprising given how strong silver has been performing, but the logic behind the gold-silver ratio is simple and disciplined. I'd like to see the gold-silver ratio continue moving lower, ideally into the low 50s or even the 40s, before making any major or aggressive changes. Levels like that would signal a much more extreme shift in relative value and would justify bigger strategic moves. For now, it's about watching the trend carefully and letting the data confirm what the market is really telling us. To understand just how powerful silver's rally has been, you have to look beyond price alone and focus on where silver now stands globally. Over the past month, something remarkable has happened. First, silver overtook Microsoft in terms of market capitalization. Shortly after that, it moved past Google. And now, silver has even surpassed Apple, placing it at the number 3 spot among the world's largest assets. Silver's market capitalization now stands at roughly $4.2 trillion. Compare that to Bitcoin, which currently sits around $1.7 trillion. Earlier this year, Bitcoin was actually valued higher than silver. Today, the difference isn't even close. Silver has clearly pulled ahead and the gap continues to widen. This shift is incredibly important because it shows exactly where capital is flowing. When institutional investors, sovereign wealth funds, and everyday market participants decide where to allocate money, they're increasingly choosing silver. That creates a powerful feedback loop. Rising prices draw attention, attention brings in new buyers, and those new buyers push prices even higher. Once that cycle takes hold, momentum can build far faster than most people expect. Now let's look at silver's performance over the year because the numbers are almost hard to believe. Silver is now up 169.63% year to date. That's a 169% gain in a single calendar year. Returns like this are extremely rare in any asset class, and what's even more striking is that the pace hasn't slowed down. In fact, it's accelerating. This month alone, silver has surged 48.09%. A 48% gain over an entire year would be considered exceptional for most investments. Silver has delivered that kind of return in just 30 days. So, what could actually slow silver down from here? Right now, it's difficult to point to any immediate obstacles. Industrial demand continues to expand. Investment demand is growing rapidly. Supply remains tight and constrained. There are no clear signals suggesting that this move is running out of energy or nearing exhaustion. To put all of this into proper context, it helps to look at silver through an inflation-adjusted lens. When you adjust silver's 2011 peak using current government inflation measures, that price translates to roughly $70 per ounce in today's terms. We've now officially moved beyond that level, which suggests that silver isn't just revisiting old highs. It's entering entirely new territory, and that opens the door to possibilities that most people are only just beginning to consider. but the more meaningful benchmark comes from looking even further back. When you adjust silver's 1980 peak for inflation using today's standard calculations, that price comes out to roughly $145 per ounce. And if you go one step further and apply the pre-1980 method of measuring inflation, that same 1980 high translates to nearly $740 per ounce in today's terms. Now, I'm not suggesting or forecasting $700 silver. The point here is perspective. Depending on how inflation is measured, silver may still have far more upside ahead than most people currently realize. Even if we focus only on the more conservative scenario, that $145 level, silver would still need to approximately double from where it's trading now. Considering the current momentum, the strong supply and demand imbalance, and the unprecedented scale of monetary expansion we've experienced globally, I genuinely believe the market could challenge that 145 level as soon as next year. These aren't wild assumptions. They're conclusions drawn from the data we're seeing right now. Before going any further, it's important to be clear about one thing. This content is purely educational and reflects market analysis along with my personal views. It is not financial advice. Everyone's situation is different, and you should always do your own research and consult with qualified financial professionals before making any investment decisions. Past performance, no matter how impressive, never guarantees future results. One of the most reliable ways to understand where we are in a bull market is by tracking public interest, and this is where the data becomes especially revealing. Google Trends offers a powerful window into investor behavior. Searches for the term silver have now reached a score of 100, which represents the highest level of interest recorded in more than 21 years. The same is true for searches related to silver price, which have also hit their highest point ever. What may be even more telling is the surge in searches for how to buy silver. This isn't casual curiosity. This reflects people actively trying to become buyers. Historically, we've seen similar spikes during key moments, such as in 2011 when silver reached $50 and during the COVID crisis when silver surged from around $12 to $28. What makes the current situation different is that today's search volume has surpassed both of those periods. This is the highest level of interest ever recorded. Taken together, this suggests that silver is moving into a breakout phase. It's transitioning from a niche investment followed by a small group of enthusiasts into a mainstream asset that everyday investors are now beginning to seriously explore. And when that shift happens, market dynamics can change very quickly. This transition phase, where silver moves from niche to mainstream, can last longer and reach higher levels than most people anticipate. That's why understanding what's happening with silver pricing across different markets is absolutely critical right now. Normally, silver trades at slightly different prices in various regions because of local supply and demand, currency fluctuations, and the structure of each market. What's highly unusual, however, is seeing premiums explode practically overnight. Earlier this week, price differences between major markets were minimal, around 3%. But that has changed dramatically. We're now witnessing significant premiums in certain regions, signaling that physical silver is in extremely high demand in major consuming nations. When prices start to diverge this sharply, it usually means that sourcing physical metal is becoming more difficult in some areas. Historically, that's one of the most bullish signs for future price action in silver. One leading analyst recently commented that, given the current momentum, a $100 price target for silver this year doesn't seem unrealistic anymore. Some have even suggested that $200 per ounce could be possible within just a few weeks. It sounds shocking, but when you consider the unprecedented move we're seeing today and the unusual market dynamics, a parabolic spike, while extreme, isn't outside the realm of possibility. Several market observers are now actively discussing the path to triple-digit silver. One pointed out that silver's 48% gain this month alone puts us on pace for prices above $100 by mid-January if the current momentum continues. Another striking metric shows that silver is now only 10 times away from its inflation-adjusted all-time high when using alternative calculations. That illustrates just how much upside potential remains. Adding fuel to the fire, one of the world's largest banks projects a silver deficit of 300 million ounces next year. Industrial demand is climbing steadily, and investment demand is poised for a major surge. All of these factors combined point to an extremely bullish outlook for silver. This is the kind of environment where big moves happen quickly, and staying informed is key for anyone watching the market. Looking at the silver exchange-traded fund market, it currently represents just about 0.3% of total ETF assets. To put that into perspective, back in 2011, when silver reached $50 per ounce, that figure was nearly 2%. This tells us something important. We're only at the very beginning of a potential inflow into silver investments. Many people are just now figuring out how to buy silver, which means the vast majority of potential buyers haven't even entered the market yet. The capital that could flow in as awareness spreads has the potential to drive prices significantly higher. If you want to learn more about precious metals investing and strategies for navigating this market, check out the resources in the description below and consider joining our community for regular updates. Watching silver's recent trajectory has been nothing short of astonishing. At the start of this year, silver traded for less than $30 per ounce. Today, it sits at $79.11. Platinum has been equally impressive, up 172.78% year-to-date, while gold, moving more conservatively, is still up 72.95%. These are generational moves in precious metals price action that has historically created significant wealth for those correctly positioned. But investing in precious metals isn't just about chasing gains. They represent something deeper: sound money, tangible wealth that cannot be printed or digitally manipulated away. The fundamental forces supporting precious metals remain firmly intact. Central banks continue accumulating gold and silver. Industrial demand, especially for silver in solar panels, electric vehicles, and electronics, keeps expanding. Meanwhile, supply remains constrained as mining production struggles to keep pace. On top of that, geopolitical tensions are escalating and global concerns over currency debasement are rising. Investors are increasingly seeking safe haven assets that preserve value, regardless of government policies or economic turbulence. From a broader economic perspective, we are living through unprecedented monetary conditions. Interest rates, though rising from historic lows, remain relatively accommodative, and global government debt levels have reached extraordinary heights. All of these factors together create an environment where precious metals are not just attractive, they are essential for preserving wealth and navigating uncertainty. Deficits continue to expand with no end in sight, and historically, conditions like these tend to favor hard assets such as precious metals. Gold and silver have served as reliable stores of value for thousands of years, outlasting every fiat currency in human history. That track record isn't just trivia, it's evidence that these assets preserve wealth through times of uncertainty and upheaval. Many people ask whether it's too late to buy silver at current prices. From my perspective, we're still in the early to middle stages of this bull market. Yes, silver has already moved significantly, but if we are truly on a path toward triple-digit silver, today's prices may look inexpensive in hindsight. The key to success in precious metals is a long-term perspective. These are not get-rich-quick investments. They are vehicles for wealth preservation and steady appreciation over years and even decades, not days or weeks. While short-term gains can be explosive, the true power of gold and silver lies in their ability to maintain purchasing power across generations. Dollar cost averaging remains one of the most effective strategies. Instead of trying to perfectly time the market, making consistent purchases over time helps smooth out volatility and ensures you steadily build your position regardless of short-term price swings. Equally important is physical possession. While ETFs and mining stocks have their place, nothing replaces owning the actual metal. Physical silver and gold exist outside the financial system, with no counterparty risk and no dependence on institutions. As your holdings grow, storage and security become critical considerations. Whether you choose home storage, safety deposit boxes, or professional vault services, having a solid plan to protect your metals is essential. It's also valuable to put today's market into historical context. Previous precious metals bull markets lasted for years and saw prices multiply many times over. In the 1970s bull market, for instance, gold rose from $35 to over $800, while silver surged from roughly $2 to $50. Understanding that history helps frame what's possible today and reinforces why a disciplined, long-term approach can be incredibly rewarding. Those historic moves took nearly a decade to fully unfold, and by comparison, we could be just a year or two into the current bull market. If history rhymes, that suggests there could be several more years of gains ahead. Of course, the journey won't be a straight climb. We should expect corrections, consolidations, and occasional sharp pullbacks that test your conviction. That's entirely normal and even healthy. Bull markets climb a wall of worrying, and the strongest investors are those who can navigate short-term volatility while keeping their eyes firmly on the long-term prize. Education is absolutely critical. The more you understand about monetary history, economic cycles, and precious metals markets, the better equipped you'll be to make informed decisions. Read books by respected analysts, study previous bull and bear markets, and get a solid grasp of the fundamentals that drive prices. Community matters too. Surrounding yourself with like-minded individuals who share a clear understanding of the precious metals thesis can help you maintain perspective during volatile times. Forums, social media groups, and local coin clubs all provide opportunities for support and knowledge sharing. At the same time, it's important to remember that precious metals are only one part of a diversified wealth strategy. While I remain bullish on silver and gold, putting all your wealth into a single asset class carries risk. Balance is essential. Real estate, productive assets, liquid savings, and precious metals each play an important role in comprehensive wealth management. Tax considerations are another key factor. Different jurisdictions treat precious metals differently. Some impose sales taxes on purchases, others tax capital gains. Understanding your local regulations ensures you keep more of your returns. When buying physical metals, authentication and quality matter. Stick with reputable dealers and choose recognized products from government mints or well-known private mints. If a deal seems too good to be true, it probably is. Premiums over spot price will vary depending on product type, market conditions, and dealer. Generally, larger bars carry lower premiums than coins, while government-issued coins tend to carry higher premiums than generic rounds. Supply and demand constantly influence these premiums, and being aware of these dynamics helps you make smarter purchasing decisions. The current market environment is characterized by elevated premiums on many silver and gold products, driven by strong demand and ongoing supply chain constraints. While it can be tempting to wait for lower premiums, sometimes the smarter approach is to buy when you can, rather than holding out for perfect conditions that may never arrive. Timing the market perfectly is nearly impossible, and in a rapidly moving bull market, hesitation can be costly. Looking ahead, several factors could push precious metals prices even higher. Geopolitical instability is at the top of that list. Any escalation of current conflicts or the emergence of new ones typically drives investors towards safe haven assets like gold and silver. Central bank policies also play a pivotal role. If major central banks resume aggressive monetary expansion, it could propel precious metals sharply upward. Even if monetary policy remains tight for a period, the broader trajectory suggests easing could follow, keeping the long-term outlook bullish. Currency debasement remains a growing concern. As governments continue to spend beyond their means and central banks accommodate that spending, the purchasing power of fiat currencies continues to erode. Precious metals act as a natural hedge against that loss of value. Industrial demand, especially for silver, deserves special attention. The global transition to green energy requires massive quantities of silver. Solar panels, electric vehicles, and electrical infrastructure all depend heavily on this metal. As these sectors grow, they consume more silver, much of which does not return to the market. This creates a fundamental supply deficit, which is only amplified by rising investment demand. When industrial users compete with investors for a limited supply, prices naturally move higher. On the supply side, mining cannot quickly respond to surging demand. Bringing new mines online takes years and requires massive capital investment. Existing mines are facing declining ore grades and rising operational costs. Supply constraints are likely to persist even as prices climb. Recycling provides some relief, but it cannot fully compensate. Much of the silver consumed in industrial applications is either uneconomical to recover or lost permanently. This combination of rising demand, constrained supply, and structural deficits is creating a powerful tailwind for precious metals, reinforcing the bullish outlook for the months and years ahead.
Electronics, for example, contain tiny amounts of silver in each device, making recovery impractical and permanently removing that silver from circulation. When you look at the setup for precious metals, especially silver, it's incredibly bullish from multiple angles. Strong fundamentals, improving technicals, and growing mainstream awareness are all coming together to create a potent combination. Are you excited? I know I am. I'm genuinely thrilled to be witnessing this historic moment in the precious metals markets. I've been following and accumulating silver since it was around $15 per ounce. Seeing it reach $79 today validates years of patience, research, and conviction. But I firmly believe this is just the beginning. Silver and gold are positioned to continue surprising the market, showing just how high prices can go. The fundamentals strongly support much higher valuations, the technical picture remains robust, and public awareness is only starting to gain momentum. Stay tuned for more in-depth coverage of the precious metals markets. Make sure you're subscribed so you don't miss key updates as this historic bull market continues to unfold. Thank you so much for watching. I sincerely appreciate your time and attention. I'll see you in the next one.